There has been a lot of talk over the years about employee remuneration trusts, the use and particularly abuse of employee remuneration trusts. The most famous case being the Rangers football club, which went into administration over the abuse of these schemes. So they were originally sold to people by a number of individuals who were getting significant upfront fees for giving advice in that area. They were subsequently proved to be a sham, and basically the whole thing collapsed, and a lot of people were, in a lot of trouble over it, facing huge back tax liabilities. Basically, the schemes were sort of created initially as a tax incentive for companies to benefit employees, and what was happening was the money was being paid into the trust, basically tax, and they were getting a tax deduction for it, a significant tax deduction for it, and lending the money back to themselves, effectively never repaying it. The loans were repaid off. So basically a complete sham. There was no commercial substance to the transaction at all, and the revenue were able to defeat that. So, however, there are still if the trusts are used properly, they are still a useful tax avoidance mechanism, or tax planning mechanism maybe is a better term, provided they are properly set up for the benefit of employees, and they can also be used to help transfer of a business to the next generation, and provided they are, as I say, are set up properly, structured properly, and the proper tax is paid when the monies are taken out of the trust, well then, it's no problem. Also, there are also share incentive schemes which can also be set up and are very effective too for tax planning still. Another case in that area which comes to mind regarding the abuse of abuse of the schemes and the subsequent what's the term I want to use, consequences for people, is Frankie Dettori, the famous jockey who throughout his life probably had, let's say, somewhere between had winnings between 15 to 8, or his share of the winnings were 15 to 18 million. The prize money in total was something like 150 to 180 million, and the jockey would typically get 10% of that. So he was sold this particular scheme, it's rumoured, by a guy called Paul Baxendale Walker, who was a well-known seller of this particular avoidance scheme. He was a former solicitor and barrister who had been effectively struck off. So the whole thing is odd, really, in my view, is generally people like Frankie Dettori have got very good and capable advisors. So it's not clear to me really how he got tangled up in that, but he did. So the consequences for him were bankruptcy, basically, that the revenue were able to show that his tax structure was a sham and set it aside. So he was facing enormous tax liabilities plus interest and penalties, and his ultimate sanction, or the only way out for him, was bankruptcy in the end. So there's a lesson in that, obviously. So but as I say, they are still legitimate tax planning tools if used correctly, and definitely worth looking at. So yeah, that's it. Thanks for listening.